Well, you could spare a thought and a little bit of relief for people living in Australia that want to get into the housing market at this ludicrous prices that housing is at, and the deflationary pricing and crashing and everything that's happening in different little burbs around Sydney and Melbourne, and it's just a cluster F of problems. So what do I have for you guys today down under? APRA to remove banks interest-only lending restrictions. So what are they doing here in plain English? They're allowing banks to actually lend interest-only. The financial regulator will lift restrictions on interest-only residential lending from January 1st in an attempt to subsidize Australia's ailing housing market. It's supposed to go down. It's been in a bull market since 1975. It needs to go down. It needs a correction. Australian proper is completely bought out. Australian proper doesn't have a chance to get anywhere. And people are holding back on having children. And this was the agenda. Let's bring in more outsiders to help the economy. But the outsiders are just buying you guys out left, right, and center, making it impossible for your kids and grandkids to even afford anything. So what's happening? The financial regulator will lift restrictions on interest-only residential lending from January 1st to attempt to subsidize Australia's ailing housing market. The Australian Prudential Regulation Authority, APRA, imposed the restrictions on March 2017 to force lenders to limit new interest-only lending to 30% of new home loans they issue. Australia's median property price experienced its sharpest drop in the global financial crisis earlier this month, with capital city values falling 0.9%. Sydney, Melbourne, the capitals that enjoyed the biggest property booms, were hit the hardest, falling 9.5 by 5.8% from peak to through. It is the second lending restriction APRA has relaxed this year. So it's just relax, enjoy the lights, the colors, the bliss. I could see the music, and I could see it, and what I could tell you is now that they're trying to revive the housing market, the Australian proper, even at interest only, because with this, I don't even know how they're doing this with the Royal Commission looming over everything, how they could pass this. This is not going to help the customer. Guys, if you're watching this and you think interest only is a good way to go and you could help build equity and blah, 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 you won't build your equity. If there is any equity in that place, you'll be taking out left, right, and center to eat, to consume, because they're going to put you into a product you can't afford to buy. In April, the regulator removed the speed limit. I like how they use this word. Instead of using proper words, they just use like allegorious, facetious terms that has imposed on lenders since 2014 to keep investor credit growth below 10% each year. APRA's lending benchmark on investors and interest-only lending were always intended to be temporary. Chairman Wayne Bryce said, just like historically low interest rates, they're meant to be temporary. They're meant to revive the market and blow hot air into a balloon, into a fictional hot air balloon in Oz, where it takes off, and everything starts going up in price. And these historical low interest rates make people think they're wealthy on paper, but they're really not. APRA's lending benchmark to investors of interest-only lending were always intended to be temporary. I know I read that. I have to say it again, in case your ears didn't believe what I just told you. Both have now served their purpose of monitoring higher risk lending and supporting the gradual strengthening of lending standards across the industry over a number of years. There's the housing, variable housing interest rates. And there it is there, co-owner occupied. And that's what they're paying right now. This is the announcement here of benchmark. Oh my God. Wow. I don't even, yeah, that's depressing. The regulator touted its success in reinforcing sound lending practices. Sound lending practices. Put emphasis on that when you read it. The introduction of the benchmark has led a market reduction in property of new new interest-only lending, which is now significantly below 30% the threshold, APRA wrote in a statement. Not a monumental change, but property analysis APRA's latest move will have very little to impact the property prices, which are expected to continue falling in most states. I don't know how these changes are really that monumental, CoreLogic's head of research, Cameron Kusher, told ABC News. ABC always broadcasting crap. If you look at lending and interest-only borrowers, it's already sitting at about 16.5% of the new lending when the cap is 30%. Go ahead, play with these numbers. Go ahead. Pretend you're in the clear. You're out of the woods. You're out of the dark. You're out of the night. Come on, pay attention. What it might do is make it easier for people who are coming to the end of their interest-only mortgages or are getting into financial hardship to refinance with a normal lender without going to a non-bank sector. So people that are coming off the interest-only lending that is coming up to fruition in the next quarter, a lot of them are going to be coming up to fruition. So they want to do is they want to protect these people and let them stay on interest only. Don't worry. Yeah, I know your house is worth less than what you bought it for, but, you know, let's just do this interest-only thing. You're not going to pay down the principal. That's okay. Interest-only lending. There's owner-occupier graph here. There's the share use of outstanding lending. An investor share of new lending. An announcement of interest-only lending benchmark right there. Wow. That's gotta hurt. Borrowers could potentially benefit from cheaper interest rate only loans. It's garbage. It's garbage. So if you have money on the side, guys, be careful. Be careful, because you could wipe out all your wealth and lose everything. JP Morgan's chief economist, Sally Elliott, interest-only loans were repriced quite significantly higher in the wake of this regulation. So there will likely be some reduction in rates for those loans, she said. But with dwelling prices still falling and lending standards tighter, marginally lower rates were unlikely to result in the quick acceleration in interest-only lending. Mark Kusher believes that the major changes in the industry will happen after the Banking Royal Commission releases its final report in February. Like I said, the Royal Commission's looming over all the people that could leave the major cities. I think, it's like the Black Plague. The people that survived the Black Plague, the bubonic plague, moved to the mountains, right? To get out of that disaster, so they could escape. But the people that could leave Sydney at the time and left to go to Hobart and all those other cities there in Australia, Perth, and all those other cities that are not so financially strangled, a lot of people moved out there to those places to make a life for themselves. But the ones that stayed in the city, ooh. Let me just breathe here. So relax and breathe here. But the dwelling prices is still falling. The lending standards tighter and marginally lower rates will unlikely result in a quick acceleration in interest-only lending. Mark Kusher believes that the major changes in the industry will happen after Banking Royal Commission releases its final report in February. So like I said, I'm a little bit surprised to the announcement to come out before we got the final report, he said. Yeah, you know why? Because prices are crashing month over month, hand over fist, fist over hand, heads or tails. You know what? They're trying everything to manipulate this housing market in Australia. They're trying to get this Ponzi scheme going. The deregulation of Australia's banking system basically sent the country into a crash course into where it is today, guys. This is really sad. It's very true. It is what it is, and it's people, educate yourselves. I recommend to get out there and use something like maybe the internet, or maybe use maybe talk to friends. Well, stay away from friends that own, because they're going to tell you to own. Just stay away from, you know what, just go in your room, go on your tablets, turn off the lights, go under the bed sheets, and start searching people's real life stories. Find channels like mine. Find a channel like mine of someone that got screwed over, and then they don't know what to do. They can't afford their mortgage. Start learning from people's mistakes, because that's one good way of learning. Let me know what you guys think. let's massage the banking system. And I can't believe they're doing this before the World Commission releases all its reports in February. Oh, wow. This is going to be really interesting to see what happens in Australia. Don't forget tonight to join me for Trends in the Housing Market. Add me on Skype, Mike Martins1980. Mike Martins1980 if you want to be on the show and call in. We're going to have call-ins tonight, all night. Call-ins, I promised call-ins for everybody because we got to get call-ins. We got to get people from Australia, New Zealand, the UK, United States of America, and Canada to call in to discuss this global housing crisis. Thanks for watching, guys. Big hug, and Merry Christmas! And if you don't like it, go to hell.